everybody, welcome to Everything Accounting. I'm Alfred, your friendly neighborhood CPA, and today we're going to be talking about write-offs, especially tax write-offs, because everyone wants to know what they can write off. So the first thing that you always want to figure out and what you want to focus on is what is the nature of your business. This is typically what I go by when I'm talking to clients. The nature of your business really will define everything that has to do with what can be written off and what can't be written off. So the other big thing that I need to make sure is very clear here is not every business is the same. So not every business is going to be able to write off the exact same stuff. There's going to be some general things that can be written off, but the majority is related to your business. So write-offs in a sense, in its nature, are essentially any expense that you incur for the purposes of making money for your business. So me as an accountant, any of my services that I invoice for, if I'm incurring expenses, so if I'm incurring software expenses, say I'm a virtual accountant, I need the internet. The internet is a major expense for me. Without the internet, I can't do my job. I can't run my business. So that's an expense for me. Calculators. I live off of my calculator. Like it's the greatest thing ever. So that is a major expense for me as an accountant. You might not need a calculator ever. So you writing off a calculator makes 0 sense. Travel. If you have to travel for work consistently versus people that don't travel for work, like there's so many things that need to be considered, and the nature of your business is what will really define that for you as a business owner. So I'll give you an example. I have a client of mine who is a tech review influencer, and he basically writes off or needs to write off anything that has to do with tech. So the nature of his business is reviewing tech advances or reviewing anything that's in the world of tech. So that's tech hardware, software, any add-ons to cameras or anything like that. His videos are on YouTube, so he has to be able to write off cameras, camera equipment, anything that has to do with his business, right? So I am totally in understanding as his accountant that he writes off anything that has to do with the equipment that he buys. If he has to, for instance, the new Apple Watch came out and he has to buy it to review it, that's a business expense. Like these are things that he needs to do to build up his content and build up his workflow, right? So it's all in the nature of the business that he's running. Me as an accountant, I don't need an Apple Watch, right? So me writing off an Apple Watch makes 0 sense. So the nature really defines everything that's going on in that sense. It's always really important to evaluate, am I spending this money? And this is the question that I always ask my clients when they come to me with their expenses is, am I spending this money to make money? Am I spending this money to reduce costs for my business? Am I spending this money to save me time for my business? So all these questions are really important because at the end of the day, when tax season comes, which is pretty close, and always around the corner, when tax season comes, you want to be prepared and you have the right write-offs and the legitimate write-offs for your business. Travel is really a big one that always comes up. Clients are always like, hey, can I write off my trip? Can I write off my trip to Mexico? Can I write off my trip to Vegas? Can I write off my trip to LA? It depends. And my answer is always, it depends. If you're going to Mexico for a conference, for a client meeting that you have to be at, or you're speaking at, or anything of that nature, sure. If you're going to Mexico because you want to just lounge on the beach for a week because it's your vacation and you're taking the family and your friends and all these people, no. It's that simple. So if you are going on a trip for work purposes, absolutely. Like I don't think any accountant will say no. Now, you have to prove that it's for work purposes. That's the key. So you can't just be like, oh yeah, it's for work purposes and have 0 proof related to it. So your accountant will have obviously questions for you. I always have questions in relation to these things. But if I can justify it and I understand the nature of the business and can justify that this is a business expense, then sure, I'll add it to your books. right? I'll add it as an expense. But if I can't justify it and you haven't done a good enough job to justify it, it's not a business expense. So these are the things that you want to keep in mind when you're doing business write-offs, right? It's all about staying in good standing with your business and being fair to the business as well as being fair to your tax filings. Because as your friendly neighborhood accountant, I advise you to make sure that anything that you've incurred in your books is legitimate, because if you get audited by the government, which is always a scary word, audited, if you do get audited for whatever reason, it does come back to bite you, and that's not something that you really want if it's not deemed legitimate for them. Another big expense that everyone talks about and everyone asks about is vehicle expenses. So this is one that can really impact you from a tax perspective, and a write-off for it is crucial. So there's limitations to what you can write off. Typically, for tax purposes, a lease of a vehicle can only be written off up to $800 in the month. But if you've purchased a vehicle, the amortization of it counts, but a percentage of your expenses of your vehicle and fuel expenses can be accounted for. But you need to track mileage and you need to justify the usage. So what I mean by those two is tracking mileage is essentially, I'm going from point A to point B for business purposes. I'm traveling to a client. I'm going to a job site. I'm doing this for work purposes for your business. Great. Track what that mileage is going there and going back to your home. And you keep something called a logbook to track all of that. Because at the end of the year, what you're going to look at, what you started the year off in terms of your mileage, and you end the year off with your mileage and deduct anything that's in your logbook, and that is your percentage of usage of your vehicle. Usage, like I was just saying, is the actual usage of the vehicle. So if you assume that 80% of the usage of the vehicle is used for work purposes, then great, prove it, and then you can apply 80% of the expenses that are incurred for the business, for the vehicle, towards the business. So it's always really important that you can justify the expense. Again, it's always about justifying with accounting. So if, me as an example, right? I am a virtual accountant, but I only have a select few clients that I work with, right? Out within the city that I'm at. So driving around is very limited in terms of what I expense for the vehicle. If I'm on a construction site, say my client is a construction based business, and they have to drive from site to site to site, and the business uses their vehicle technically to drive for all these sites, then yeah, there's legitimacy to that business expense. So it's all in understanding the nature of your business and the nature of what you're trying to write off. If it aligns, then perfect. You have a justifiable expense at the end of your tax year. If it's not, then just don't include it. It's really simple, right? So the other thing that I will always tell my clients is, if you are unsure, ask me. This is why we're here. This is literally 90% of my job is answering questions. It's not even accounting at this point. It's literally just answering questions about accounting. So I have clients call me as hey, I have this expense or I have this expense. Is that okay? I'll get emails about the exact same thing. If you are unsure, this is why you trust your professionals. And it's really important to trust your accountant. Obviously, it's really good for you to understand what you're doing for your books. And this is why you're here in the first place watching these videos. But when you have an accountant that you can trust and you do trust, ask them when you're unsure. And they'll guide you to the best of their ability, right? So always fall back on the two thoughts, is that you want to justify the expense. And if you're unsure about justifying the expense, you ask your accountant. And that's really it. That's the basics of writing off. So when you're filing your taxes this year, or when you're compiling your books for year end, just make sure that all the expenses that you've incurred, or all the expenses that are in your books, are legitimate. And they've been approved to a certain degree by your accountant. And then you're in the clear. No issues whatsoever. That's all you got to do. So anyways, hopefully by the end of this, you've learned a little bit more about what write-offs are and what you can or can't do in terms of write-offs. And hopefully it sets you up for success in the future. I've been Alfred Zaglul, your friendly neighborhood CPA, and this has been Everything Accounting, and hopefully you learned something about write-offs today.